Hello and welcome back to CEOs in the Boardroom, where today we've welcomed back Michael Rowley, the CEO of Stillwater Critical Minerals, to the show. Thanks so much for coming in to talk with us today, Michael.
Thank you very much. Glad to be back.
So when you were here last month, or when you spoke to us last month, you spoke about the most recent results from your drill program in Montana. But for people maybe less familiar with your story so far, can you start by providing us with a snapshot of the company and your key critical mineral asset at the project in that state?
Sure, absolutely. We have half the Stillwater complex in Montana. This is storied ground that's been producing critical minerals since many decades before they were critical. We have also 4 other assets that we don't talk about as much. Those are effectively for sale in some form or another, given our focus in Stillwater, Montana. We've attracted Glencore as a 15.4% shareholder. I'm sure we'll touch on that. We've attracted top talent from Ivanhoe, including the ex-chief geologist. And this is all as we build out that critical mineral supply chain in the U.S.
We've seen a number of Canadian companies benefit from government funding over the last couple of years as well, and especially in the last 12 months. Given your exposure to critical minerals with a U.S. address, can you describe your efforts here and any goals that you have in that regard?
Absolutely. Yeah. I mean, our address in the U.S. is fantastic, actually. To be in a currently productive, and also historically productive U.S. mining address is just an immense positive right now in this environment. In terms of government funding, we've already received $2.75 million US in DOE grants as an industry partner to Cornell and Lawrence Berkeley Labs, as announced. We've been in with the US Geological Survey now for over 6 years. They've been studying the Stillwater complex for many decades before that, which speaks volumes. Now we're looking at larger funding, and particularly DOD funding, as you've seen other Canadian juniors achieve, especially for U.S. assets and especially in the critical mineral space. This is matching grant funding, very significant, and it reflects the U.S. subsidizing mining and the U.S. inventory of critical minerals, if you will, and supply chain as never before. Back to the neighborhood, I mean, we are adjacent to the chrome mines in the Stillwater district that were subsidized by the U.S. government in the 1940s and 50s. They've looked to this complex for critical mineral supply historically. This has to be very positive for us as we move forward. I'll make a key point as well. It's been mentioned that there may be changes to the IRA Act. We are not in line for IRA funding. It does not directly fund drilling and PEA studies and feasibility studies as we're proposing. This is funding likely from the DPA Title III of 1950. This is bipartisan stuff that's been around longer than I've been around. It's not IRA related, and we're positive about that.
Fantastic. So I have sort of a macro question. In 2024, we've seen gold rally to new highs, with some of the major mining companies benefiting from the really bullish sentiment. But it seems that hasn't necessarily trickled down to the explorers. What has your experience been so far this year?
That's absolutely correct. Gold hit record highs. It's still at $26.50, which is high in historic terms, but you're absolutely correct. It's pulled back. We saw a really good movement of capital into our sector in late October, and that was stalled by the U.S. election. And it's been pretty noisy since then. Bitcoin has surged and gold has fallen to $26.50. Longer term, we think precious metals look good, and we think the geopolitical aspects of metal supply look really good, and that the U.S. in particular will be the right place to be. You're absolutely correct that funding did not come down to the juniors, and I'll use that Florida show that we attended in Fort Lauderdale late October as an example. We saw a lot of U.S. generalist money looking for value, and it's very much in the junior commodity space. We've been starved out for capital for many years now. Companies like us have $16 billion U.S. gross metal value in the ground, and yet our market cap is, 20 million U.S. I mean, the disconnect is profound. And yet we've got Glencore on board. We've got Ivanhoe personnel, ex-Ivanhoe personnel. We've got the government's attention. You know, this is a quality asset with a quality team that wants to go somewhere. These valuations don't make sense. They're not sustainable. And we're glad to see that capital looking for value and finding it in the junior space. Looking forward, I firmly believe that this will turn. I'm surprised it hasn't already turned. Many of us in the industry expected last year would be the turn, especially with the cut in the U.S. interest rate. We believe that's coming, and especially again for U.S. critical minerals assets.
So you do have eyes on your stock, and like that's not for no reason. You've had a number of key successes this year, including a financing led by Glencore. Can you walk us through that key accomplishment and the other key accomplishments at Stillwater that you've enjoyed over the last year?
Absolutely, yeah, and we'll touch on some of the non-core assets too in relation to the past year. You're absolutely correct that we did our second placement led by Glencore, and that's a huge achievement, because they've now written $7 million in checks inside of a year for us. That says that they like the asset, and we padded her in. Let's see, they were 2.1 million. We brought it up to 3.9 million with other places around them. That was in May of this year. We did key work on the ground this summer. We did an airborne geophysical survey that detailed the complex, and that led to the really Ivanhoe quality of modeling that you saw in a news release 2 or 3 months ago. We've now modeled in detail the core of the project, the 9.5 kilometer piece that holds the 5 deposit models to date. We've now mapped continuity of mineralization across that. And I know every junior says they've got a drill hole 5 or 10 kilometers away that speaks to mineralization, and it's obviously connected. Our neighbor's deposit, the JM Reef deposit, Sibanye, now mining, is actually contiguous across even 45 kilometers, and certainly that 10-kilometer core. So this isn't rocket science. That peridotite zone that's shown in that lovely model is highly prospective and wonderfully underexplored. And we've now modeled it. We've mapped continuity across that. And you'll see us drill and expand these 5 deposits and advance them towards each other, and also expand around them. That was a key development this year, and you can tell I'm rather excited about that. We also did some necessary permit expansion work in the background that we're excited about, and community relations work. We ramped up more than ever as part of that government funding piece, the community engagement. We're very excited about Stillwater and the expansion programs that we have in mind for the coming year.
But what are the key goals for the next 6 and 12 months? And you can base that off what you've had already the last year.
Absolutely. We're working on an updated mineral resource estimate as described publicly. Bigger picture is that government funding piece, and we hope to have news on that in the coming months. We're looking towards our biggest campaigns in the coming year. We've got a large number of quality drill targets across the entire, really the 32-kilometer project, certainly within that 10-kilometer core of the project, the resource area as we call it. The big item for the coming year, I really hope we can deliver a PEA by the end of the year. This is a PEA stage project. It's worthy of that status. We've got 40,000 meters of drilling done to date. That's something that people seem to forget. We've got Glencore on board. We're excited about that. And you'll see us increasingly move the project in that direction. The US government is asking us questions about when this can be in production. End users of metal are asking us the same question. So it's time for us to turn the car in that direction, if you will. Also updates on other non-core assets as well.
So speaking about the U.S. administration, we have a new one, or they have a new one coming in to office in January. How do you feel this may impact Stillwater, or will it at all?
It will be beneficial for us. I think, frankly, either party would have been positive, given that we're in a pro-mining district where the majority of the wages are actually from mining. But the Republican win, I think, will be very beneficial. And they're already talking about amending the IRA to reduce friendshoring and put tariffs on critical minerals imported. This puts a premium on metal in the U.S. And, we're in a producing U.S. district, and Sibanye-Stillwater's adits are remarkably close to our biggest deposits. The infrastructure is there. Even the miners are there, and some of them have been laid off now. This is all really pro-America, pro-Montana, pro-critical minerals in Montana. and I think very beneficial to us.
So definitely a lot for investors to keep watching and to look forward to with Stillwater.
We're excited, and we're more committed than ever to our work in Montana. Yes, we're looking forward to 2025 very much.
That's awesome. Thank you so much for joining us today.
Thank you. Glad to be here.